We're back now with Frank Holmes, CEO of U.S. Global Investors and chairman of Hive. Frank is, of course, diversified across both the crypto space and the traditional precious metals assets like gold and mining. And we'll be talking about both these asset classes in Frank's outlook for 2022. Welcome back to the show. I'm happy you're here. Thank you, Frank.
Happy holidays, and now it's a new year, 2022, and it's going to be another phenomenal year.
Well, it wasn't phenomenal for the metals last year, but we'll talk about that. But first, I want to get your macro outlooks for these assets. I want to talk about first the geopolitical tensions that you see brewing around the world. You and I talked offline about this. We talked about Ukraine, China and Taiwan, of course, Latin America. So what are these themes telling you as an investor? Tell us about some of these tensions that you are paying attention to right now.
Well, China is no doubt been the most successful in Africa. They control Ivanhoe Mines, which is the richest copper producer that's expanding in its production because there's a shortage of copper. And I think you've seen now they're building a huge port on the very tip of the western part of Africa to be closer to North America. They're building ports all around the world, and what you're seeing happening in Latin America is a perfect storm for us, because Chavez and Castro basically 20 years ago started fueling radicalism all through Central Latin America. And Chavez was taking his oil revenue and funding aggressive unions, NGOs that would support political leaders that were very left to hardcore socialist to communism. And it just takes time. And now you're seeing it populate and show up the difficulties in Chile, Peru. There's concern in Colombia this year. And here's some classic things to look at, is that when these leaders come in, you see their currency fall when copper prices go up. Now, Chile, with strong copper prices, it's usually prior to this recent drama, highly correlated. If copper is up, the currency's up. Copper is down, the currency's down. Same thing with Peru. Oil and gas is very dominant for Colombia. For Canada, how strong oil is really the tipping point between U.S. and Canada is the strength of oil. Same thing with Russia. So when we look at countries' payments and look at currency flows, we look at some of these big commodities, are they major exporters or importers off? So what's happening in Latin America is radicalism in Chile, in Peru. They're shutting down mines, they're creating strikes, they're creating difficulty. That's hurting supply, but the overall amount of money being printed by the G7 are $20 trillion. They've got $1 trillion for green spending in Europe and over $1 trillion in America. That means anything that's going to be green is going to have big demand for copper in particular, lithium batteries. So you're seeing these imbalances, and you have to look at the macro point. I'm trying to share with you is China, and there's articles in Bloomberg and Wall Street Journal and economists on China trying to take over Latin America. That will have a big imbalance on supply of commodities. And I think that this is going to drive inflationary in a lot of these commodities, and it's important to be long now.
Okay, so yeah, China is expanding its foreign direct investments to multiple continents, not just Africa, South America, you're right, as well. Let's talk about something that they might expand into, but with a little less peace. Some might speculate they might forcefully invade Taiwan in the upcoming year or potentially in the next few years. Is that a scenario that bothers you?
No, I don't think it's going to happen. And I think the sword rattling with Ukraine, with Putin, is because he's trying to renegotiate. He's a master of chess. He's a master of game theory. So and the Germans have been very hard on him. So he's going to renegotiate contracts, and they're giving tough guys. So all of a sudden he's, okay, I'm going to invade Ukraine. Oh, you can't do that. You can't do that. Then give me better terms and make it easier for us to move around in Europe. It's just to me, it's just negotiations. But what is real is the railway lines, the ports, the subway that's being built in Bogota right now is by the Chinese. And the Chinese can come in because now they've got socialist leaders. It's easier for them to cut a deal with these countries. They've taken over Venezuela. Venezuela's a basket case. It had the highest GDP per capita in Latin America. It's now the lowest. It's lower than Haiti. It's a disaster. So this means that we're going to get these incredible imbalances, but the G7 countries are focused on growth and everything that's going to be green and their concerns on climate change. So you just sit there and say, okay, what commodities do you need to rebuild this economy to deal with the concerns of climate change? And you need silver for solar panels. You need copper for everything, lithium, so cobalt. So I'm really staying very bullish on a lot of these commodities, but these imbalances.
Mm-hmm. Let's talk about the other markets now. Gold and silver, they underperformed the S&P 500 last year. Before we get your outlook for the following year, what happened last year? Why do you think it didn't perform as well as some might have expected?
Well, there is this concern of suppression by the G7 countries. And there's concern, I've mentioned before in your program, of operating like a cartel. And people laughed at that when I try to suggest that it appears this way. Well, when they came out, the U.S. this past year, and came out with a flat tax with the G7 countries of 15% for corporations, well, that means there is a cartel. And those central banks are working together to print all this money with MMT as the theory, modern monetary theory, to keep the economies going. So the thought process are we can raise regulations as long as we keep printing a lot of money. We can raise taxes as long as we keep printing a lot of money. What happens on that uptick is always trillions more each time there's a problem. Before they fix it with $2 trillion, it's now $8 trillion. Now for the U.S., it's an $8 trillion balance sheet the Fed has to deal with. So there are real important, we believe at U.S. Global, policies, government policies are a precursor to change. And we're always looking, David, for the imbalance between the monetary and fiscal policies. And we're seeing this excessive money printing. I think that there is some type of a suppression in the futures market or something with this gold. It's because I've never seen before such negative real interest rates. And real estate jumps 23%, art jumps 25%, used cars jump 35%. Used cars, housing, replacement of housing, my insurance, my D&O insurance goes up 25%. My healthcare insurance went up 23% for my employees. So you say there's only inflation? This is BS. This inflation is greatly understated. And so the only way to hide all of that is to say, well, inflation's lower because the factors that create that. And I've told you before that if you use the 1980 factor model that says what CPI is, if you use that today, inflation's 14%.
Well, you did a SWOT analysis on gold, so strengths, weaknesses, opportunities, and threats. And in one of your bull cases, you stated that retail gold sales in China are starting to pick up, and they've rebounded with bracelets, jewelry, earrings, necklaces, all things that require gold. How big or significant is the gold jewelry market now, Frank?
It's the best. It's a love trade. Love is so key, and it's a cultural phenomenon. If in Asia, India to China, 40% of the world's population, they used to be 30 years ago having less than 5% of the demand for gold. Now they're at 55% of demand comes out of these countries. A lot of that comes from love. So no doubt, look at luxury goods. You know, we have the only luxury goods mutual fund. Why did I have that? Because my expertise in gold. And it crushed the S&P last year. So you take a look at LVMH, you take a look at high-end cars, whatever you want. When it comes to jewelry demand, it's going to continue to be robust and strong. But what you're seeing, though, is the buyers of junior mining stocks versus new crypto coins. It's a millennial. It's a demographic analysis that's so important to recognize who's buying it. There's no regulatory oversight of all these new coins and tokens and all that pump and dump they talk about that happens in that space. So these kids go and they can speculate, and they're used to speculating on digital money. They're not going into junior mining. And what we're going to see in my age is 66 years old. I'm a baby boomer. And over the next 25 years, $10 trillion are going to go from baby boomers over to millennials and generations X, Ys, and Zs. So in that transition, we grew up with monopoly money, paper money. They grew up with digital money from being good gamers. And that is a very important part of the psychology of how they think and function. And so I think we're going to see a continue that the crypto world, the Bitcoins, the Ethereum space is going to be dominated by young millennial investors that are not afraid of the volatility. And it's okay because they're younger. My age is going to be more consumed with gold. Gold has a lot less volatility. Gold is a more liquid asset base for a lot of institutions to be able to buy.
Yeah.
It's a most liquid asset class.
Well, you wrote, and this is a good segue into the cryptocurrency space, you wrote in your SWOT report for gold, one of the threats for gold is that Bitcoin, you said, Bitcoin remains a key competitor to gold. Like gold, Bitcoin functions as an absolute store of value. Going back to what you said earlier about volatility, if Bitcoin is perceived as a store of value by the up-and-coming millennials, Gen Zs, do you think then that volatility profile will lessen as it matures, as more people adopt it?
Well, right now we're dealing with the sentiment, and every time it has a big run, you get all this negative announcements and meetings by regulatory regimes around the world have to come and regulate, and so that sentiment factor has a big movement of the price action. Still, you're seeing that the U.S. is not allowing where you can buy Bitcoin directly. You have to use the futures market, that derivative. That allows them to suppress it. It's well known in the industry that the Federal Reserve can use the futures market to, they call, stabilize gold or stabilize the stock market. They can't buy individually stocks, but they can turn around, and they've done this during the crisis over COVID, was use ETFs to stabilize and get yields down for government corporates, for also tax-free bonds. So we're seeing a bit of a change here in how capital is being formed. But what's really important is that millennials are important for price discovery. Price discovery attracts institutional money, and America is trying to get their arms around how they want to regulate it. And they have a great person ahead of the SEC, Gensler. He understands digital and crypto. He's the best person, I think, to be there to shepherd in rational, intelligent regulations. But it's only going to grow. And so we have to recognize this is a millennial phenomena of that's what they're going to buy. And it's a very much smaller market than gold. And it's capped at 21 million coins. And now, we go back in history, David, the GLD allowed retail people to buy fractions of gold. They didn't have to buy a whole ounce. They could buy a fraction. And it was inexpensive to buy a fraction. PayPal last year and Robinhood all of a sudden allowing Coinbase to buy a fraction of Bitcoin. And so that world is very different, but it's capped at 21 million coins. I wish these gold mining companies that have free cash flow, my model says that 61% of the universe of 100 gold producers I track have free cash flow. They should do what crypto mining companies are doing, is hodl their gold. They should hold on. They shouldn't sell it. They believe it's so cheap. And that's what a lot of Bitcoin people really believe, that Bitcoin is going to trade much higher with all this government money printing. And the leader there has been Michael Saylor. And Michael Saylor is now a big influencer with 2 million followers on Twitter.
So basically you want the gold miners to cut supply. Because if they're holding some of it, I mean, they're not selling it to the market, that would do well for the price, wouldn't it? Yeah,
absolutely.
It would go up.
If they believed it. But a lot of these guys don't believe in gold. They believe just making the cash flow.
I see.
And so the millennial won't invest in them. The millennial is going to invest if you really eat the food that you're trying to sell me. You have to wear the clothes that you're trying to sell me. You have to really believe.
You eat the food that you sell, Frank. I know you hold some of your Bitcoin and your Ethereum. Let's talk about your outlook, because the traders and investors watching want to know this. What is Frank Holmes' outlook for Bitcoin and gold? Which assets will perform the best? In other words, do you think gold will do better or Bitcoin will do better in 2022?
I think Bitcoin can do much better. The only headwind is going to be regulatory policy making. That will be the biggest thing that adds to the daily volatility to it. So otherwise, I think that Bitcoin next year has a greater chance of outperforming gold. But I don't. And so what we're seeing now is that all the crypto mining companies are moving up and down by the minute with Bitcoin, Ethereum price action, the way that gold stocks move up and down with gold. So the quant funds are no doubt using in particular Hive blockchain as a proxy. And I'm just really focused what we're doing in Quebec and in New Brunswick and Sweden and Iceland is green energy only, producing mining and both Bitcoin and Ethereum and holding every coin we can. And so far it's paid off that we're still the most profitable crypto mining company.
So, okay. Do you think gold then can breach $2,000 by the end of the year?
This year, yeah. I think when the DNA of volatility is 20%, it's a non-event to go up 20%. So 2 years ago, it went up 40%, which was a 2 sigma move. So a 1 standard deviation move is nothing. And at 60% of them having free cash flow, I can tell you right now, what would happen if there's 90 million ounces a year being produced and all of a sudden 10% of that is no longer going to be sold? Gold mining companies are putting it on their balance sheet the way Hive does with their crypto. I think that all of a sudden it'd be 2,000. It's 1 sigma move.
All right. Now, Bitcoin, $100,000. Everyone's talking about it. People were predicting that by the end of last year. It didn't happen. What's your forecast for this year? Can it still happen?
Yeah, for sure. I mean, it's a heck of a move, David. It far outperformed the majority of asset classes. The S&P 500, I think there's like maybe 20 stocks that outperform Bitcoin.
Well, yeah.
Ethereum outperformed Bitcoin. And that's really helped Hive blockchain because we mine Ethereum inexpensively with green energy and we hodl it. So when you get rising Ethereum from last year, it ended the year at 700, and this year runs over almost 4,000, it's a big move. So I think that Bitcoin and Ethereum trade much higher, but you have to remember the DNA of volatility of both of those. It's a non-event to go up 100% in a year or correct 50%.
I'm going to close on this question. Talking about stores of value of assets to a few people. Which asset would you leave as an inheritance for your kids?
To leave for my kids.
Yeah. If you had to leave something as an inheritance, some people like real estate, some people just leave cash, some people have a trust fund, some people have a GIC. It doesn't matter, right? If you had to pick something to leave as an inheritance, something you think will retain value for the next 30 years, what would it be?
The trust would have a lot of companies I've invested in. It would have land in it. But most of the money that I've gifted for the trust is for the education of my grandchildren, great-great-grandchildren, for generations. It's all to make sure that there's economic support if there's a health problem with a child, because that's very hard in marriages, and any form of education they need, special education, whatever, the money is there for their education. And I've gifted a lot to universities and to high schools for continuous education. Education is number one thing that I can pass on.
Wow. Okay. Well, thank you. That was very insightful, Frank. I want to thank you so much for everything you've done for us in 2021. I look forward to working more with you in this year.
Look up.
Look up and look out for more content from Kitco News in 2022. I'm David Lynn. Subscribe to our YouTube channel.